Are you considering rolling over your 401k to an individual retirement account or IRA? This is a decision that many Americans face at some point in their lives. It's not an easy choice. After all, the world of finance can often feel like a labyrinth, with twists and turns that could lead you either to a treasure trove of well-managed wealth or a pitfall of poor investments and financial loss. Rollovers are a prime example of this. The topic is fraught with complexity, and the stakes can be quite high. Rolling over your 401k to an IRA is a financial strategy that can offer you greater control over your retirement savings. This might be a suitable option for you if your employer-sponsored 401k plan is limiting your investment options, or if you have left your job and are looking to move your savings into a more personalized retirement plan. On the flip side, a rollover might not be the best decision for everyone. For example, if you're content with your current plan, or if you're still employed with the company that offers your 401k, rolling over to an IRA might not be necessary, or even advisable. So, how do you know whether to roll over your 401k to an IRA? First, you need to understand what both accounts are. A 401k is a type of retirement savings plan offered by many employers. It allows you to contribute a part of your pre-tax paycheck into this account, where it grows tax-deferred until you withdraw it in retirement. An IRA, on the other hand, is a retirement account that you open and manage yourself. It offers more investment options and often has more flexibility in terms of contributions and withdrawals. Second, you'll need to compare the features of both accounts. For instance, is the investment selection in your 401k satisfactory? Are the fees reasonable? Do you have the time and knowledge to manage your own IRA? Third, consider your personal situation. Are you planning to retire soon, or do you have many working years ahead of you? Will you need to make early withdrawals? What is your tax situation? Answering these questions will require some research, coupled with a fair bit of introspection. It is, however, a necessary step if you want to make an informed decision about your retirement savings. Remember, there's no one-size-fits-all answer when it comes to financial planning. Everyone's situation is unique, and what works for one person might not work for another. That's why it's crucial to consult with a financial advisor before making any major decisions about your retirement funds. In conclusion, rolling over your 401k to an IRA can be a beneficial move depending on your individual circumstances, investment goals, and financial needs. It's not a decision to be taken lightly. It requires a thorough understanding of both types of accounts, a careful comparison of their features and fees, and a deep dive into your financial situation and retirement goals. But don't let the complexity of this decision scare you away. With careful consideration and planning, you can navigate the financial labyrinth and make a choice that serves your interests in the best possible way. Here's what you need to know. In 2020, a staggering 5.6 million people rolled a combined $618 billion into IRAs from workplace 401k plans. But deciding whether to roll over funds from a 401k to an IRA is not always as straightforward as it seems, and there are several factors to consider. Investment fees, for instance, are an important consideration. 401k plans generally have lower fees due to economies of scale. However, the quality of the 401k plan and the investment options available should also be evaluated. While certain investments may not be available in IRAs, the menu of investment options is often broader. Managing multiple 401k accounts can be challenging, while consolidating assets in one IRA can simplify management. But it's worth noting that 401k plans generally offer stronger creditor protections than IRAs, though there may be exceptions. IRAs generally offer more flexibility in terms of withdrawals compared to 401k plans. But beware, transitioning to a more conservative investment strategy as retirement approaches is crucial to mitigate risk. Regular check-ins and tune-ups are necessary to maintain a healthy financial portfolio. And let's not forget taxes. Be aware of tax ramifications when managing retirement resources, such as considering Roth accounts for tax-free distributions and understanding the penalties and taxes associated with early distributions from traditional retirement accounts. Seeking the guidance of a financial or tax professional is recommended when moving or consolidating retirement accounts. Remember, a 401k rollover involves moving money from an employer's retirement plan to an IRA within 60 days of leaving the employer. It's important to understand the tax implications and considerations of each option before making a decision. In conclusion, while leaving the 401k money where it is may be an option, rolling it over to an IRA opens up a wider variety of investment choices. When rolling over, it's advised to opt for a direct rollover rather than an indirect one to avoid taxes and penalties. So, before making a decision, weigh your options carefully. Seek help from a trusted financial advisor. Consult with the HR department about rollover rules, find a low-cost, reputable financial services firm, and ask for an IRA rollover specialist. To recap, rolling over your 401k to an IRA can be a smart financial move, but it's important to consider several factors first, from investment fees and options to tax implications. Always seek professional advice to make the most informed decision.